pioneer of technical analysis in India, only on ET Now.
Okay, time now to look at a couple of F&O strategies, and let's pull all those up for you in a very neat table, and there you can see them. So you have really many options. If you're expecting prices to drop into support levels, you would buy at the money, that's ATM / out of the money, that's OTM calls, or you would buy futures, or you would have a covered put right. If you have prices that rally into resistance areas, you would buy at the money puts or out of the money puts. You would otherwise sell futures, and the other strategy you might use is a covered call right. Prices stage a breakout, you would either buy calls or you would buy puts, as the case may be, whether prices are going up or prices are going down. Now let's come to the next one, where you're saying prices are range bound. You would sell a straddle using appropriate strikes. So lots of strategies. Let's pick this one, and Doc, tell us how do you actually use appropriate strikes for this triangle?
Well, a strangle and straddle are both meant for trading sideways range market, where you expect either volatility also to drop. Now, I would say for smaller investors or smaller traders, strangle would be somewhat better. But for a strangle, you need to have a range which is established, right? For example, let me show you on the chart of Nifty. As this is not the chart of choice because things are not established. But if, as per this chart, let's say this you deem to be a resistance, right? This is near a gap area, so you think this is going to be a resistance, and now that with this huge decline, you feel that the bottom has been made. So this you are deeming it to be a support. Now the support is around 4800 level, and the resistance is around 5200 level. So you think that the market is going to remain in this range for a while, let's say for about a month. Then you can sell the 5200 call and you can sell the 4800 put. So thereby you are defining a range where you are collecting the premium of both these options, and you expect the market to remain between 48 to 52, in which case you will actually pocket both the premium.
Right. Interesting strategy there. We've got lots more on that table, but I think it'll be a couple of sessions more that we'll need to really go into details there. But strangle is one that Doc has pulled out. There are spreads that we spoke about also, but all of that is kept for another day. Right now it's time for profile of a trader, and this week, because we've been looking at the F&O space, it's a trader who looks at F&O.
I try to correlate equity markets movements along with currencies, bond yields of different countries, important commodities, and try to gauge the direction of the market apart from scanning my daily derivatives data. Preserving capital in mayhem of 2008 in a small equity derivatives fund which I was managing was my biggest fail. In 2009, I partially missed out on a great momentum which was shown in banking sector and couldn't able to ride the entire move. That was my biggest miss. 3 important lessons which market has taught me. Liquidity is very important, it rules. So always keep eye on it and be on its side. Second, a trader should not form very extreme positive or negative view in market. It blocks your mind. And third and most important, you compromise on your return but never compromise on your risk. No matter how experienced you become, it is always important to revisit the basics. I think apart from discipline, if a person has knowledge of the subject, has an ability to accept the failure and move on, and if he or she can manage to keep emotions at the bay, I think that person can become a very good trader. So I like 2 books. One is Options as a Strategic Investment by Lawrence McConnell. It covers basics and advanced. And the other one is very nicely written by Charles Cottle, and the book is called Options Trading, The Hidden Reality.
Okay, time for the chart quiz. Last week we'd asked you to give in your views about the Bank Nifty and Orchid Chemicals, and here's the entry that Doc's picked for you.
Thanks for all those entries. Once again, lots of requests, lots of suggestions. We'll try to implement them as we go along, no doubt. The entry for this week that I have picked is once again from Renu Goel, and the reason for it is the same. Very nicely laid out chart, well annotated. See, the key thing when you sort of annotate a chart should be that anybody who sees it should be able to see the logic of your analysis, and that's where I think Renu Goel's annotations of the chart have really scored. But interestingly for this week, most of the answers were quite varied in terms of what was the outlook for the Bank Nifty and for Orchid Chemicals. In fact, some of you people have actually skipped Orchid Chemicals altogether. I really don't know why, but then that is what has happened. But I think among the whole lot, only Renu Goel surprisingly managed to get the fact that Orchid Chemical had dropped down to the 62% retracement. I think Zubin Zaveri, you had sent in something where you went in favor of more decline, so you used the projection and I think completely missed out on the fact that the retracement was showing you a support. Lots of people have said that you need to be looking for more bearish targets on the Bank Nifty and on Orchid, etc. But I think many of you also missed out the fact that both these instruments are in deep oversold, particularly Bank Nifty. If you see it at the RSI level, for example, is at a 4-year low. Now that is deep oversold, and from there a bounce is bound to happen, and we are seeing that as we speak also. So it will be ideal if we look at these oversold levels and try to figure things around them.
From next week, we're going to change this segment a little bit, and instead of having a chart quiz, what we would love for our viewers to do actually is to go through many charts and pick out one which they think is the chart of the week, a chart that gives some significant pattern, some significant breakout, something that comes out as an actionable trade, and you need to send in to us by the Wednesday. By coming Wednesday, we would like all your entries in, and we would have Doctor actually pick out the best chart which he thinks gives in a trade, and a chart that actually highlights a particular type of formation or a particular type of technical analysis tool that has really worked well on that chart. So we'll wait for your entries for that. Well, with that, we've come to the end of this episode, which was a special on futures and options. I hope you enjoyed that. When we come back next week, we will be talking a little bit more about channels. We'll be talking about Bollinger Bands and pitchforks. So pitchforks do a lot more than just dig up your gardens. We'll figure that out next week. Till then, keep trading and